If you want to make consistent profit in your Forex trading, you need to have a strategy that can be replicated every single day. And ideally, a strategy that has very little room for human error. The main reason that this is so essential for long-term trading success is that you don't want a strategy that has so many moving parts before you can even see a valid setup. You want one that is easy to read, one that can be replicated session after session without any confusion, and you want one that can be implemented with full confidence during tough periods such as prolonged drawdown. And one of the main benefits of having a strategy that can be copy and pasted or a simple strategy is that it's very, very easy to test and refine. So in today's video, I'm going to go over exactly how to create that strategy from start to finish. I go into much more detail in my mentorship group, which you can check out in the description. I obviously give live examples, trade breakdowns, and a breakdown of every single confluence that I personally use in my trading. So if you are interested in some more information, be sure to check that out. The best way to know if you have a simple strategy is by opening the charts and seeing how long it takes for you to see if there is a valid setup. Personally, I want to go onto the charts and within 30 seconds, a minute, be able to see if there is a setup in my session. I trade London session, so I can go on the charts just before 8 AM when I usually start trading, and I can see over the next few hours if there's going to be a potential setup. Just because my strategy is so easy to replicate, it takes me seconds, if not minutes, to look on the charts and see if there is a setup. And I'm pretty sure most people watching this video would want that luxury in their trading. And if this is something that you have actually dreamed of, be sure to continue watching the video, and maybe you too can open the charts and see if there is a setup very, very quickly. So let's define a copy and paste strategy. A lot of people will think it's just one or two confluences, and as soon as you have those two confluences, you can get into a trade and a trade becomes valid. Some people think that it's a strategy that you can trade every single day, but this is kind of true, but kind of not true. It obviously depends on the way you trade, the styles you trade, the pairs you trade, and also the timeframes you trade. We're going to cover all of that, but my definition of a copy and paste strategy is one that takes very, very little time on the charts and one that gives you the ability to live that trader lifestyle, the lifestyle that everyone sees on social media. It doesn't mean that you can trade from the beach every day, drive Lambos around. This could be the case, but obviously that is not the most ideal situation to be trading in, especially if you want to stay in your routine and get consistent results with 100% focus. And I also think it makes your trading much more enjoyable. Being able to go onto the charts and not have the pain of going through 10 different pairs, 10 different time frames, 13 different confluences, and then you have to correlate it with dollar index. Don't get me wrong, these strategies and these ways of trading can work, but for me, that's not why I got into trading. I got into trading so it gives me freedom in my life. So freedom outside of trading and also my freedom in trading. I don't want to be staring at the screens for hours and hours every single day just to be able to see if there's a setup. And then I also have another time frame conflicting the setup. It can be quite difficult. And especially for beginner traders, having something that is very, very simple to see. And if you implement this from the start of your trading and you're not already into that complex strategy sort of area in your trading, it can kind of set you up for success very, very early on. I feel like the trading industry has kind of moved towards complex strategies in the last few years as it has become more popular on social media and with a certain set of traders. And you'll often see these traders that are selling courses, they'll label it as basically the holy grail. So they'll have, let's say, a support and resistance strategy, and they'll label it as a ZQY block, or they'll create massive acronyms for simple ways of trading just to make it seem like if you don't know what they're talking about, then you're missing out on the holy grail. And this makes traders that are watching this content and consuming it very, very confused because they think they're missing out on something that they don't have, so they purchase the course to find it out. But then once they've purchased, they'll find out that there is no holy grail. As long as you put in the work for backtesting, it doesn't matter what that certain confluence or the certain risk management model is called, any strategy can make money as long as you have it refined. So how do you actually build a copy and paste strategy? Firstly, I feel like you have to start with the pair. So when you're actually picking pairs to trade, there are quite a few factors to actually take into account. One of those is where you actually live in the world. And this will determine your time zone, and time zone is very, very important in trading. If you're looking to trade London session, but you live in the United States, for example, you'll have to wake up very, very early in the morning to trade this session. So maybe you don't want to trade a session that's not fitting with your time zone, and obviously a pair that has a lot of volume in that session. So when I was actually looking to trade this simple strategy, I was trading gold at the time when I wanted to make the switch, and I was trading gold in New York session. So that was in the afternoon in the UK, and I wanted to trade in the morning. And the main reason behind this was I thought that trading in the morning would then give me the rest of the day to do whatever I want. Whereas if you're trading in the afternoon, you have all of the morning to then build up, and you're always thinking about what's going to happen in the markets in that New York session. So the way I think of it is I want to trade a pair that has volume in London session so that I can have my trades done by lunchtime, and then I have the rest of the day to think about and do whatever I want. This obviously doesn't mean I'm not going to do anything trading related for the rest of the day, because you obviously have to journal, you have to backtest, you have to consistently improve in your craft, but it does give you a lot of freedom. So what pairs did I choose to test? Well, it was mainly GBP USD and GBP AUD. These were pairs I'd already dabbled in before, so I already had prior experience with these pairs. And if you do have experience with previous pairs that will move in your session, then this could be a great way of trading. I obviously wanted to trade a pound pair. You know, the currency where I live is the pound, and I'm trading London session, which is the UK session. So it seemed to work out perfectly. So I tested 2 pound pairs. Let's say you want to trade London session, you can obviously trade pound pairs too, but GU and GA were the pairs I had the most experience with, so I wanted to pick those. And the reason I limited it to just a couple of pairs is because I don't want to be testing 5, 10, 15 different pairs. Obviously, they could be more profitable than the ones I've already chosen, but over the couple of years I had experience already in the markets, I'd already taken a liking to GBP USD and GBP AUD. So it was kind of a no-brainer to actually go with those. And if you already have an idea of the movement and you have prior experience trading those pairs, it can definitely give you a foot up for your testing. Then we have to move on to timeframes. And people often neglect the importance of choosing a good time frame. They often think, okay, so if I just do top-down analysis, I'll choose the daily, the 4-hour, the 1-hour, the 15-minute, the 5-minute. And if I just do that, then I'll get a good idea of what's happening in the markets. And personally, I don't think this is a great way to trade. I've always traded with one time frame. When I was trading gold, I was mainly trading the 1-hour time frame, and then I switched to the 15-minute time frame. So the way I chose the 15-minute time frame, it kind of depends on the style you need to trade and your personality. For someone that is very, very patient, they could trade the 4-hour time frame or the daily time frame. They're okay with waiting days or weeks even for price to come into their area to then enter a trade. Whereas someone with less patience that wants to be in and out of the markets in one session, in one day, they would have to choose a lower time frame. So I wanted to be in and out of trades within 45 minutes up to 4 hours as a kind of average amount of trade time. So I picked the 15-minute time frame. I did test other time frames, notably the 1 hour, the 30-minute, and the 15. I didn't want to go lower than the 15 because obviously strategies work on any time frame, and I've noticed that with my swing trading. Currently, I obviously traded the same strategy as I traded on the 15 on the 4 hour, and it works very, very well. But I feel like going lower than the 15 is just not the best way to go for the way I trade and the way I've traded previously. And for the swing strategy that I'm actually using currently as my kind of second strategy, my side strategy, for example, I'm trading the exact same confluences. So everything we go through in this video, you can implement and then change the time frame if you feel like it. So those trades on my swing trading account on average a couple of days, whereas on my main account, my 15-minute time frame account, they are a matter of hours. So it definitely makes a big difference the time frame that you're actually choosing to enter on and do your main analysis on. And I feel like as long as you choose one that is in line with the movements that you actually want to see, it can be a fairly simple decision. If you want to be an intraday trader, choose the 1 hour or below. It can be quite difficult on the 4 hour if you want to close your positions in one day, because you only really have 3 or 4 candles of the full trading day in the UK, for example, if you are awake and sleeping at normal times. So lower time frames I feel like are personally the best. And if you're looking to test various different time frames to maybe see which one you prefer, which one is more profitable for your way of trading, some traders will see setups on the 4 hour much clearer than setups on the 15-minute because you don't have so much clutter. So within 4 hours, On a 15-minute time frame strategy, you have 16 candles. So 16 candles compared to one, it can be quite clear to see what's happening in those 4 hours over one candle rather than 16 individual small candles. So if you are going to test this, I would say 1 to 2 years of data, just comparing the results, and you kind of get a feel for what it'd be like in your live trading. Would you have been able to hold a trade that long? Would you have been able to wait 4 days for it to come down to your entry? Maybe not. It could be more profitable, but it doesn't fit the trading style that you're actually going for, and you can notice this from the back testing that you're actually doing. And you also need to focus on the profits in comparison to the drawdown when you are doing this testing, because a lot of traders just look at how much profit they're making, but don't care about their drawdown. And this is where they go wrong, especially in the prop firm space. They'll try and pass prop firm challenges. They see that they can make 10% profit in a row, but how much drawdown do you get before you make that 10%? What if you take a challenge and you hit a losing streak as soon as you take the first trade? Can you survive with the risk you're actually using? Do you know your average losing streak? Do you know your max losing streak? How many trades could you possibly lose in a row? These are factors that you actually need to take into consideration, because sometimes a strategy that returns less but also has a lower drawdown in comparison to a strategy that returns more but has a higher drawdown can be easier to scale. So let's say a strategy that makes 10% in a year but only has 2% drawdown is better, in my opinion, than a strategy that returns 20% but has 8% drawdown, because you can scale up the risk on the first strategy to actually make more profit with the same drawdown. So 4 times the risk, then you're making double the profits with the same drawdown. So this is definitely something to take into consideration, as I feel like traders will handle a strategy better and have full confidence in the strategy if the drawdown isn't too high. So this is something to think about. And once you have your timeframes and your pairs sorted out, you then need to think about your confluences for your entries and for your main analysis of your strategy. A strategy would be nothing without confluences, so the importance of these are through the roof. And without a combination of proper risk management and good confluences, a strategy is nothing. So if you don't have those, they are the key points for your strategy. And I honestly think the best way to learn confluences is through purchasing a course. You probably think I'm just saying that to promote my course, and obviously you can buy it if you want. I don't need you to buy it, but if you want to learn how I trade, it's down there, you can buy it. But the main reason why I think a course is so good is because everything is in one place and you're learning from one person. You'll see a lot of traders try and learn from YouTube videos. Video titles such as Easy 5-Minute Phone Strategy or Use this strategy now to pass your prop firm. And these sort of videos will do quite well on social media, specifically YouTube, because traders are looking for an easy way to trade. But they'll soon notice that in 20-minute video, breaking down a trade on the charts won't give you everything you need to learn. And then that trader will hop to another channel and look for the missing part. And then they'll hop to another channel to look for another missing part. And they're mainly just searching for the holy grail in their trading. And as we know, this doesn't exist. Why is a course better? Well, you're learning from one person, which means that if someone does something differently to another person, you don't know which one to believe. One person's strategy that you learned first could be saying that price is in bullish movement, and another person could have conflicting views and say that price is bearish. So which one do you trust? You don't know which one's right, which one's wrong. One could be right 60% of the time, one could be right 50% of the time. You just never know. Whereas if you're learning from one person and you have a reliable source of information, it can take you a step further than the person learning from YouTube, for example. And I'll quickly pop up on the screen some results from my students in the past couple of months, and they've been absolutely killing it, especially with very, very large prop firm payouts, and notably consistent payouts, not just one-off payouts. And you can also learn from sheer hours of chart work, but it can slow you down. You could go on the chart now and just search for patterns. Will that take you a lot longer? Yep. And do you want to be as efficient as possible? Absolutely. Especially if you're watching this video, you can only make money in Forex trading with money. So if you don't have money, then I guess this is kind of the only way to go, or watching YouTube videos. But if you do have money and if you want to save hours and hours and hours of time, then definitely courses are a good way to go about it. Just make sure the person you're actually buying it from is a reliable source. And the majority of course buyers actually go into purchasing a course to be profitable very, very quickly. But obviously this is not the case. You can't just watch any course content and suddenly be profitable, just like how you can't watch a YouTube video and suddenly be profitable. They see the market differently to you, so you can obviously take what they're saying and adapt it to your own style and adapt it to how you see the markets and how you want to trade. And if you don't put in the work, you can never expect the results. So we're going to move on now, assuming you have your confluences sorted out, or you know what to do to find the perfect confluences to trade from. And we're now going to talk about refinement. And this is how you kind of develop that edge in the markets, how you get above the average trader. And this takes a lot of time and dedication, granted. So how do you refine your strategy? Well, it's very, very simple. And this is through testing and collecting lots and lots of data. One of the main pieces of my strategy that I focus on, and I feel like is very, very important, is testing my risk to rewards. And I do this very, very simply because I don't want to have my testing to be very, very complicated. I don't want to try and build a simple strategy, but make it super complex when I'm actually testing and collecting data for it. And I believe by testing your risk to rewards and which one is most profitable, you can work out how to make as much profit as possible for your strategy. And the way I make my trading even more simple, and a lot of people don't actually do this, they think it is wrong, but it works perfectly for me with my day trading strategy. And this is by using a fixed risk to reward. You're probably wondering, how do I know which risk to reward to actually use? And this is super simple. I just test every single individual risk to reward up to a 1 to 5, and then see which one is most profitable. So the way I do this, I'll go onto my chart, I'll do my normal back testing, and I'll have the TP set at a 1 to 5. And if that trade goes 30% into profit and then reverses, I obviously know for that 1 to 5, it's gone around 1.5 R in profit. So I can tick 1 to 1 risk to reward, and obviously 1 to 2, 3, 4, 5 gets across. So over 1 to 2 years of testing, I can quite easily see which risk to reward gets hit most often. And obviously 1 to 1 will get hit most often, and 1 to 5 will get hit least. But this gives us valuable data. And the reason this is so good, you'll obviously be thinking, if 1 to 1 gets hit most often, we know which one to use. But this is not the case, because 1 to 1 risk to reward, you'll obviously need a much higher win rate to be as profitable as you would with a 1 to 5. So a 1 to 5 could be hit only half the time of a 1 to 1, but it will be more profitable. So you need to do a combination of your win rate and your risk to reward to work out which risk to reward is most profitable over those years of data. And this is often the case that a lot of traders go into their trading and have profit left on the table. They'll have a very, very high risk to reward. Notably, I've seen people use 1 to 10s, 1 to 15s. Price will go 1 to 6, reverse to their stop loss. So technically, they've left 7% on the table there because they could have had 6% and instead they've lost 1%. So you need to find a way to maximize on profits that you could potentially be missing, and testing your risk to reward can be a very, very easy way to do this. And there is nothing simpler than going on the charts, having a 10 pip stop loss and 30 pip take profit, which is what I do. And then that is it. I don't have to worry about moving my stop loss size or my TP. It is just set at a 1 to 3 every single time. My swing trading is very different. I feel like using the higher time frames, I can be more lenient and target lower risk to rewards because my win rate does tend to be higher the higher the time frame that I use. So I can use 50, 100 pip stop losses with a 100 pip or 200 pip take profit and still make as much profit over the year. Refinement can go much deeper, but I will say this for my mentorship members to look at. And I will say that refining your trading can be very, very good. Another thing just to mention is trading hours. And I feel like having set trading hours can be very important because you don't want to be trading when you've historically had bad performance. This is why I say trading one session can be great, because if you trade bad in New York, or you want to actually have a life and not be sat at the charts all day hoping that you don't miss a setup, it can be quite good to only trade one session, because I know that I can trade for 4 hours, 8 till 12 of my trading hours, and then I can do whatever I want in the evening and afternoon. The main reason this is important is because I know that during those hours, I don't want to have distractions. I can put my phone on do not disturb, although it is always on do not disturb, but I know to not have distractions during those hours because those are my focus hours. Having 4 hours of good focus trading can be much more beneficial than 10 hours of 10% focus. So just keep that in mind when you are choosing when to trade and when to be active on the charts. So if you have gotten to this point in the video, you're definitely on the right track towards creating a profitable copy and paste strategy. And when you are creating a strategy, you need to be careful to not overcomplicate it. You don't want to be going in and end up testing 5 different pairs, realizing they're all profitable, and then trying to add 5 more pairs and then 5 more pairs to try and make as much profit as possible. I feel like focusing on a couple of pairs maybe can be much more beneficial than 10 pairs, mainly because of risk. Let's say all 10 pairs present a setup at the same time. How do you choose which pair and which trade to take? Especially if those pairs are conflicting. Maybe you're trying to buy the pound, but then also short the pound. It can be quite difficult. So that's something to keep in mind when you are choosing the pairs, to just not overcomplicate it. If you're making good profit over the year, be happy with your profits and don't try to push for too much and get too greedy, because it can come back to bite you. And as long as you are focusing on improving every single day as a trader, that's all that really matters. Improving every single day and not plateauing, not burning out, just slow, consistent gains is the key to success. Not quick, fast gains and then burning out and then losing all the profits you made during that sprint period. Treat it as a marathon, not a sprint, and you will definitely win in the long run. After a few months of learning and refining your edge, you can too be trading a very, very simple copy and paste strategy and hopefully making lots and lots of profit.